The UAW strike. There has been talk and some reports of some workers at Tesla striking, at least in one country. But Tesla, Toyota, some of the others, I think they're working without unions. And, you know, Elon Musk does his best to sort of give stock options and actually raise wages so that the workers do feel appreciated. Is this something that you see as a potential real headwind, maybe even in 2024, where he might see a Tesla strike?
Look, I think American automakers in general have two headwinds. One, they've got rising labor costs. And two, they have a legacy 100-year built-out dealer network. Tesla doesn't have to worry about those things as much. They've got the most roboticized manufacturing lines in the world, and they don't have to worry about an external dealer network with conflicted interests. So you really have as a battle here between the Chinese makers like BYD and SAIC that will become household names that have a huge advantage with lower cost labor and lower cost batteries. And you've got Tesla that's been the global leader in streamlined manufacturing and in software, and this over-the-air software that drops literally as much as $200, $300, $400, $500 of pure profit to every car sold annually. That gives Tesla a big edge. So that's why Tesla and the Chinese are showing up on top. There's no mystery here. The American automakers are going to have to figure out how to fix for that.
So Tesla today is at 238. Where do you think that's headed? And BYD, is that a stock you would buy?
So I think you have to look at BYD, fastest growing auto company in the world, extremely profitable. They're going to challenge Tesla in Q1 and maybe even in Q4 for who's selling the most units. Tesla's going to be at roughly 1.8 million. BYD is going to be right there with them. And I will tell you right now, BYD is going to be a little more profitable. But Tesla's ready to strike back at BYD, bringing a $25,000 car to market in the next 24-ish months. That's going to be powerful for Tesla. And then BYD is going to have to deal with the issue that there are IoT devices in every Chinese car they sell. A lot of people are not going to be as comfortable with that. So a lot of intervening factors. It's going to be a fascinating one to watch and find, but there is a new big three in town, and investors need to get their heads around that.
While Tesla is one of the most innovative and amazing companies in the world, its stock is also very volatile. That's why you need to be careful and smart when you invest in this company. As an investor, you need to know what not to do and what to do instead. Today, we're going to show you some of the mistakes that many Tesla investors make and how you can avoid them, whether you're a beginner, an expert, a fan, or a skeptic.
I think the backdrop is important here, both the market and for Tesla. So the Magnificent Seven have had an incredible year, as everyone knows, and I think there will be scrutiny on these names as we begin next year and people level set and say, where do we go from here? And we think Tesla's earnings are going to be flat next year. We think they're going to have to lower expectations around deliveries for next year. And the stock is trading at nearly 100 times our estimate for next year's earnings. And so if collectively the Magnificent Seven are going to, potentially pull back and investors are going to think about these stocks more critically, certainly Tesla is one of those companies where I do think that we could have underperformance. And as you mentioned, Tesla did very well this year. The stock almost doubled, despite the fact that earnings were essentially cut in half. Analysts thought they'd do about $6 in earnings a year ago. They're going to end up doing under $3. And the stock was remarkably resilient because people believe that growth is still intact. And I think 24 and 25 are going to be pretty tough years for Tesla. And so you do run the risk of losing this growth narrative. And it's really hard to sustain a multiple like that if people are doubting your growth. So that's essentially the case.
But let's just talk about the growth piece of it, because I understand the margin compression piece of it. But I'm curious sort of what you think about the growth piece of it and the idea, if you believe, and look, it's been a long time, you need the breakthrough to happen. If you believe the sort of self-driving car narrative, if you believe some of the tech narrative, does that change any of these dynamics?
Clearly, if Tesla was able to deliver and regulators were able to accept full self-driving, a year from now, that adds potentially $10,000 plus in profit per car, and that dramatically changes the economics. I think our belief is that it's difficult to know when full self-driving will kick in, but we think it's years and likely multiple years, not only from a technology perspective, but perhaps more importantly from a regulatory perspective. And then, I think more importantly, we think that over time, full self-driving will become democratized, that there are lots of really big companies investing lots of money in full self-driving. And so Tesla may very well get there first and may be able to command higher prices for a few years. But ultimately, like everything in the auto industry, competition drives down pricing. So that $10,000 per car, if Tesla's able to capture that 3-5 years from now, that could be $1,000 or $2,000 per car 5 years after that.
Right.
Tesla is one of the most popular and innovative companies in the world, and many investors are fascinated by the MP have the potential to revolutionize the ultimate industry and beyond, and many even dream of retiring on the stock. However, investing in Tesla is difficult because there are many pitfalls and challenges that you must be prepared for, or you could lose your hard-earned money. The world's most exciting and innovative company, Tesla, is difficult to invest in. Here are 8 mistakes you must avoid if you want to retire on Tesla's shares. First, don't invest more than you can afford to lose. Tesla's price might fluctuate greatly according to market sentiment, news, and earnings announcements. Some investors may purchase low and sell high due to competitive regulation and innovation. Others, if you invest more than you can afford to lose, you'll be looking at your retirement savings, which are meant for long-term growth and stability. But you could end up losing everything and jeopardizing your financial security. If you like this type of content, hit that like button. Subscribe and enable post notifications to stay updated on Tesla and to research before investing. Tesla operates in several industries as an automotive and tech company. To understand how Tesla makes money and its future prospects, you must do your homework and learn about its business model, financial performance, competitive advantages, risks, opportunities, and challenges, and keep up with the latest news and developments about Tesla and its industry peers. Investing without investigation could lead to rash conclusions based on rumors rather than facts and reasoning. Number 3, avoid investing without diversification. Tesla isn't the only stock that matters for retirement. Inflation could lower your money's purchasing power over time, and taxes and capital gains fees can cut into your profits. Diversifying your portfolio across all assets protects you from market collapses and geopolitical crises interrupting trade and supply lines, maximizing your chances of success. Don't invest without a strategy. Investing in Tesla is more than just buying shares. You need a clear vision of what you want to achieve and how you're going to get there. You need to decide when you want to retire on Tesla stock, how much you need, how much risk you're willing to take, how much return you're XPing, and how long you plan to hold on to things like that. You need a plan to execute that approach, monitor your success, and adjust your tactics based on changing market conditions. If you've made it this far, leave a like, subscribe, and ring that bell. Finish number 5, don't invest without a clear exit plan. Tesla investing is a long-term commitment that requires a plan to buy and sell shares, a rationale for departing, a target price or percentage of return, and a time frame are needed. A defined exit strategy can help you avoid fear and greed-based judgments and lock in earnings or maximize losses at the proper time. Number 6, invest only after understanding the risks and obstacles. Tesla is risky and has numerous unknowns that could affect its performance and valuation. Tesla faces competition from automakers and tech businesses, legal and regulatory issues, production delays, quality difficulties, reduce risks and obstacles such as supply chain disruptions, shortages, and social backlash. Learn a company's strengths and flaws. The opportunity threats competition, customers, suppliers, partners, regulators, monitor market developments, consumer taste, and technical innovation because they all affect Tesla's business. Number 7, Tesla investing requires flexibility and adaptability. Dynamic and changing car makers regularly update their products, services, strategy, goals, vision, and culture to satisfy customers and stakeholders. This means that what worked for Tesla in the past may not work in the future. What was successful for Tesla in one market may not work in another. And what was popular for Tesla among its fans may not work with its critics. Keeping up with these changes and adapting to them is a very important skill to have, and you need to be flexible with your investment.